When will this 24-day sideways consolidation come to an end? Why is 25.4k so aggressively defended? And finally, what are the probabilities of September being red? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic and relaxing weekend. In today's video, we're going to be discussing the short-term range, the 24-day consolidation, why this range has been defended so aggressively, what the next move could be, and of course, the macro charts. We'll be taking a look at the weekly and daily technical and structural levels, and of course, even talking about September and the probabilities that this month will be a red month. Before you get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and with the relevant economic events. If you are interested in trading, you can join our trading VIP channel. We post trading signals with exact entries, exact targets, exact stop losses with trade justification, exclusive charts, and everything you need to be in the loop and trade these signals effectively. You can see massive profits just in the last few days alone in this VIP channel. Plenty of green ticks, plenty of targets reached. Not only will we get access to this group, you'll also get access to 5 group chats. The general chat, the trading chart and education chat. You can see all of our members in here absolutely smashing it on a daily basis. The news chat, the trading setup chat, where you can post your own ideas, and our daily videos and help chat. If you're interested in joining all of that, contact me in the pinned comment in the free channel for more information, including access to our trading track record, which has over 730 days of 730 trades at a close to 80% win rate. Go ahead and check it out. Let's get into a video. So, starting on the market data, 24-hour volume is abysmal, guys. It is absolutely abysmal. And now it is the weekend, and as we know, every weekend, the volume is essentially gone, right? The volume drops significantly over the weekends, and it's getting worse and worse and worse as we are progressing through the year. We're seeing volume on exchanges drop. We're seeing overall volatility drop. And as we see those two things fall, obviously, we do see the weekend price action become worse and worse. And by that, we get indecision, we get consolidation, we get a few scam wicks. We don't really get too much movement going on other than the sporadic occasional move, more or less sideways on the weekend. But it is a good time to plan and prepare for the coming week. All in all, volume very low at 23 billion. 24-hour liquidations, of course, are low as well at 14 million, down 60%. Looking at September, we are currently down 0.75% for the month, with August ending down 11%. Again, historically, September is quite a red month. If we look at September in general, and we go over the 13 months that we have in history, and again, this one only shows 10. If we go back to the higher time frame chart, we can actually go over every single month. 13 months in total will come back. We actually have a 76.9% chance, based on our historical month data, that this month is going to be red. We'll discuss this in just a moment. Moving back over to our volatility index, we can see the 30-day has seen a bit of a spike. And again, that spike was more or less caused by the news events that came out in the last couple weeks, and it has fallen back down for the price action, and the volatility index is plateauing / starting to drop back down. We do expect the volatility index to drop all the way back down to these low points. Overall, the volatility index are sitting at historic lows, right? We are sitting at very, very low levels we haven't seen for many, many years. Looking at the liquidations, of course, with 14 million liquidations and the weekend being the weekend, we aren't seeing too much price action, and thus we are seeing a very even split between shorts and longs liquidations in the last 24 hours. Going over to price action, we can see we saw quite an aggressive rally toward the top side of the range, If you watched our video a couple of days ago, we said at this level here, we are more likely to reject. Resistance is resistance. The move was insignificant. It didn't mean anything. We didn't do anything but retest the range high, and we expected a full-blown rejection all the way back down to retest our range low. In fact, if you are in the VIP, you would have known that signal was given, that trade was given in the VIP, and we did catch that short all the way back down. Nevertheless, in today's video, we're going to be talking about this. We're going to be talking about what happens next, and we're going to be talking about this. What does it mean, and where will it go from here? Before we get into all that, we'll go ahead and jump into the DXY. So the DXY has again closed, and it closed above 105, which of course is relatively bullish for the DXY on the higher time frame. Before we can say with certainty the DXY is going to be macro bullish, we do need to break above this 106 level, this upper range of resistance right over here. Breaking above here would be absolutely bullish for the DXY, and that will, with a very high degree of certainty, push down the asset prices further. The dollar starts to gain significant strength. We are very likely to see asset prices fall. If we take a look at this, this is close to 1 year, okay? This is close to a 1 year long resistance. It's a 280 day, so about a 9-month long resistance. If we break above here, we're going to see a macro shift in direction for the DXY from this sideways downtrending consolidation into a new macro uptrend. So very, very important that the DXY actually rejects here if we want to see asset prices continue upwards. If we look at it from a technical perspective, of course, we don't have a lot of data so far. We only have 1 day of data within this range. We have to assume first and foremost, resistance is resistance until it is not, and therefore the probabilities of rejection from this level are higher than the probabilities of a breakout from a level until we actually get that breakout. The breakout is assumed to not occur. This is how we actually monitor our levels. If we take a look at momentum, we can see the RSI has slightly peaked over here on this local high, representing a possible bearish divergence, possible exhaustion moving into resistance. Again, it is far too early to say anything with certainty. It is far too early to even give probabilities. We're more or less going to be watching this as the week opens, get a few daily candles printing, see what happens, and then we can go from there. If we do see a rejection, that could provide some short-term relief, but while we are in this resistance, again, we could hypothetically and very plausibly move towards the upper range of that resistance at 106. Moving on, the S&P 500 looks a little bit better. It closed out a little bit better than it was looking on that last day. We did see a break back below. We have pushed back above. Again, it doesn't really mean anything until we start breaking these high points. Until then, we do still expect this downtrend to continue. Same goes for the Dow Jones. We need to break above this local high point at 36,000 to continue upwards. Until then, we are going to be retesting this uptrending support line, and if lost, we will continue lower. So, as you can see so far, the premise of the video right now, the premise of the state of the asset market is we're kind of in this, we're kind of on the edge of a cliff, right? We're kind of in this major decision zone. And if we relate that back to Bitcoin, I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And talk about where Bitcoin is. Well, the reason this range has taken so long to play out, the reason we have been in now a 24-day long, essentially a 24-day long sideways consolidation with the occasional scam up or down. You know, we had a few wicks toward the upside, we had wicks down over here, we had wicks over here, we had a couple wicks over, all these were basically news events, right? All these are basically news events. We had that big move up over here, which was a completely manipulated move. A complete upside liquidation, followed by a sell-off. Again, we did short this move, which was awesome. We actually shorted, we played this one out perfectly. We made a lot of money on that one, but nevertheless, it was manipulated. So if we eliminate those, outliers, we can almost say we have been pushing sideways now for nearly 24 full days. And the reason this has been happening is due to the absolute significance of the current level of support we are retesting. When we retest points on the chart, that if broken, will result in significant directional shifts in price action, those levels preventing that directional shift generally require a lot more volume to break through, as they are significantly defended by bulls and bears. To give you a prime example was the 32,000 to 31.3k resistance. This was a major resistance level. In fact, if we broke above this level, we would have flipped into a macro bullish trend. Therefore, this is a macro bullish trigger point, okay? It is a major trigger point on the chart, meaning it is a historical, okay, and significant point of resistance, which will be defended aggressively by the bears. That is why when we had this cluster of price action, we saw more or less the same thing. We saw strong sideways consolidation in a horizontal range with large grabs on the top and downside until it finally chose a direction to move into. We are seeing more or less the same thing happen here. We are seeing a large horizontal consolidation with strong liquidity grabs toward the top side and downside before it makes a directional move. The reason being is because this level of support at 24.4 to 25.2 is equivalent to this level of resistance in significance. This level of resistance was the macro bullish trigger. This level of resistance is a macro bearish trigger, meaning a loss of 24.4k will send us into a macro bearish trend, and that is why it is a major bullish support, and that is why we are consolidating so aggressively across it, because if it is lost, the macro trend will shift. I hope that shines some light on it. I hope you now understand why it's so significant. Let's talk about this chart a little bit more, and then we'll jump into more of the macro and then come into that short-term price action. So really quickly, I've gone ahead and made this chart as simple as possible to identify the key levels on this chart you should be watching out for. Primarily, we are macro bullish above 32,000. We are macro bearish below 24.4. We have a major support, as just discussed, at 25.2 to 24.4. We are weekly bearish below 28k, and the macro range is weekly bullish above 25.2k. Okay, so right away we have that flipping point between 25.2 to 24.4, which is going to be our bullish to bearish flipping point. Okay, perfect. So at the moment, the price is technically higher time frame bullish, although it is significantly losing strength. It has significantly lost strength, and it is retesting essentially that last line of support. That doesn't mean we're bouncing. That doesn't even mean we're going to crash. What it does mean is the current range of price action has a greater probability of a bounce according to the structural levels than it does for a correction under here according to the structural levels. The technical indicators are actually contradicting that statement and actually resulting in a slight increased probability of a breakdown. We'll discuss that in just a moment. So how should you be playing this range? Well, since we are in a horizontal consolidation, you shouldn't be taking big positions here. Again, and by big positions, I don't mean you shouldn't be scalping big positions. What I mean is I don't think you should be looking for massive swings like that or that from this position. If you're looking for a huge swing down, wait for a breakdown. If you're looking for a huge swing up, wait for a break up, wait for the triggers, wait for the trend to become favorable and give you a probable edge in the perceived direction you want to actually move in. Do not try counter trade, do not try front run these consolidations because they are very choppy, they are more or less neutral. We have to wait and see how they play out. So let's talk about this chart a little bit more. And I actually want to bring up a shorter time frame version of this chart. And that one is going to go ahead and be over in our Telegram channel. If we take a look at our Telegram channel, we have this chart posted as well. So this is a short-term chart, and I can go ahead and bring it up over here, but it's a little bit easier. We have a very simplified explanation of this range. This green box is a 25.2 to 24.4K support. You can see below there, bears have high time control. Above, bulls have high time control. As we remain below this downtrending diagonal resistance line and momentum remains negative, we are in a weekly downtrend. To show you one more time on the chart, while we remain below the RSI trend line, okay, the RSI trend line, which is going to be this trend line over here, we'll go ahead and pop it in, and we remain below the price action trend line, we are in a weekly downtrend. For a weekly downtrend to break, we need to break above 28K, which is going to trigger a break above not only the confluence point of the downtrending diagonal resistance and 28K, but also the RSI. That is going to be 3 points of validation, okay, structural, okay, technical, okay, and trend-based breaks, okay. That is going to be 3 of 3. That is 3 of what we need to validate a break upwards. Then the trend will turn back to weekly bullish, okay, and we are likely to continue upwards. Until then, we are in a downtrend moving into support. The probabilities of a slight breakdown of this are actually quite equal, okay. If we break down support level, then we break down significantly. So let's go ahead and talk about September. And we'll talk about why the technical indicators are bearish. So first and foremost, let's talk about September. Total September months have been 13. We've had 13 months of September. If we add up all the negative months and all the positive months, it gives us a combined percentage of negative 70.65. So obviously we are much more negative than we are positive. If we divide that number by 13, it gives us 5.43. In fact, it's actually negative 5.43, which is going to be the average September gain slash loss, which is negative 5.43%. If we take a look at 13 divided by 10 or 10 divided by 13, we get this number. This is the probability of the month being red. So according to our historic data, we have a 76.9% chance of September being red, and if it is red, the most likely drawdown is going to be negative 5.43%. So let's go ahead and take a look at this and apply it to the chart. If we zoom in a lot and take the monthly open price, which is going to be this little price over here at 25,934, apply a 5.43% drawdown, 5.43% drawdown, that takes us to around about 24.5, okay? 24.5 is, that is where it takes us. 24.5 is in fact within the range of support, which is the major bullish support. And therefore, I think it is unlikely, based on the data, okay, we can say it's unlikely because we have the data to back that up, that in September, we're going to be losing the major support of 24.4. The likely scenario is within this month, we are going to be breaking down to retest this range at some point. The big question then is, are we falling below it or are we pushing up? So let's take a look at our data. If we take a look at our technical charts over here, we can see massive weakness on the monthly chart, on the weekly chart more specifically. We can see a loss of the 50 EMA. This is signifying a trend shift. We have a downtrend developing. However, we aren't very volatile in this trend. We are very close to the 50. We are very close to the moving averages, okay? So it is a downtrend, but it's a weak downtrend as of right now. It's a weak downtrend. Moving on to Gaussian channel, we can see the midline of support in the Gaussian channel is still intact. If we lose that level, we will crash lower. Where is that level sitting? It's sitting at 24.4K, okay? Very strong support, 24.4K. If we lose it, we continue down. And finally, bull market support band, we have retested and rejected from that point. Again, signifying essentially the same thing, that the 50 EMA did signify, which was a flip in the overall trend and a start of a new downtrend. If the Gaussian channel is lost, we can expect a full-blown correction, much lower, of course, breaking below the lower band, which will take us sub 20,000 if we lose 24.4. So again, that is how significant 24.4K is. If we do lose 24.4K, we're coming all the way down to retest $20,000. Very significant. From a structural perspective, we do have a head and shoulder pattern over here. We can see head and shoulder pattern. If we draw the range high of the head towards the neckline prior to the breakdown point, that actually takes us within this range. It actually takes us directly to $19,200. So again, that is something to watch out for if 24.4K is in fact lost. Let's summarize up and wrap up the video on a smaller time frame. So smaller time frame, 24 days of consolidation. We explained why it's significant. We explained why it's been going for so long. We've also explained exactly what this range is actually meaning for the price action. It means indecision at support, essentially. That is essentially what it means. So if we take a look at this range and we say, what is going to happen next? What does it mean? I don't know why my resistance actually just got deleted over there. Let me go ahead and pop that one back in. I think it was at somewhere around up here. I'll go ahead and fix that up in the next video. But if we go ahead and talk about this range, what does it mean? What is it signifying? And where will the price go? We have to take a look at our key supports in the range. So first and foremost, the range itself is defined by the price action basically compressing between 2 points, which is going to be a horizontal point at 25.7, okay, and our horizontal point at 26.3. Above 26.3, we are bullish, okay? We're short-term bullish. Short-term bullish meaning we're going to be continuing upwards, where we will continue upwards to as our next resistance at 27K. Perfect, okay? If we break above here, we have strength above here. That's more important. We have strength above here. We are likely to continue upwards. Again, this is not a breakout. A breakout requires not only the price to push upwards, but we need to have the buying pressure, volume, volatility, and momentum behind the price validating that break up. If we have negative momentum, we have lowering volatility, we have lowering volume, we have lowering, volume delta as we've broken up. All that says is exhaustion. All it tells us is a liquidity grab. It's a failed breakout. Even if the price is above, it tells us to short. And that is exactly what we saw and exactly why we shorted. The same goes for a breakdown. If we have a price breakdown, but we have all the metrics that, move price action or define what price action is doing, in opposition to what the price is doing, there's a pretty good chance the breakdown is going to be a false break. So we have to look for validation. I always tell my students, I always tell everyone watching is, don't just look at the price action. The price action is a visual representation of the data, and sometimes we can get discrepancies between the two. Okay, we have to be looking at what the data is suggesting. The price action is just very much can be deceiving, particularly in these large moves or liquidity grabs. The price is meant to fool you. Look behind the price. Look behind the curtains, okay? So if we do fall below this level, we have to expect, again, if we break below it, the continuation will take us to 25.2K. Between this range, I am very neutral. I would be looking for short scalps at the top. I'd be looking for long scalps at the bottom. At the moment, I am more hedged toward the short side, meaning I am more likely to be taking short scalps at these resistances than long scalps, as if we take a look at the charts from a technical perspective, the higher time frame charts are still slightly bearish. Okay, they're still slightly bearish. The technicals are still slightly bearish. We are developing a downtrend. If we're developing a downtrend, there is more selling pressure than there is buying pressure, meaning there is significantly more resistance above us to break upwards than there is support below us to break downwards, okay? That is something to keep in mind. I'm going to go ahead and end up the video there, guys. I don't want to go for too long in these videos. I'll have to come over and discuss the short term in more detail tomorrow. Again, it is a weekend, so not much too much is going to happen. Thanks for watching, guys. Check out our new YouTube channel, the MegaWhale Alt. So we'll be doing altcoin videos very shortly. 500 subscribers, and then we might start our video. So check that one out. You can also check out the Crypto Academy, guys. It is our link down below. It takes us to our 10-unit course. We teach you how to analyze, trade, and chart for yourself. I hope you have a great rest of the day, and I'll catch you guys on tomorrow ones. Cheers.